Hello traders, and welcome to a new video on mastering supply and demand runs. I did two videos like this in early 2018. I did one on the Bitmex order book, and then I also did one on the GDAX/Coinbase Pro order book. And I never talked about Bitmex in relation to supply and demand runs, so I thought that this topic would be very helpful for any trader looking at altcoins or XBT USD on Bitmex. All right, before we get into supply and demand runs, we now have the professional trading group set up. So when you buy the price action volume guide called Gravity, you get access to this group where we have practice questions set up, daily practice questions, daily trading challenges. You can chat with other members, post analysis, post your live trades, and we review trades and we look at each other's analysis. And really the goal of this group is to turn you into the best possible trader that you can be. And also this week we have a challenge of the Trader of the Week. So this Sunday, the best trader here in this professional trading chat, so whoever posts the most answers or the most correct answers to the practice questions gets the gravity challenges correct or is profitable on their trades on those challenges, takes good trades, and posts good analysis is going to become the Trader of the Week. And as Trader of the Week, you're going to get a few advantages, and that will be released Sunday. So if you're interested in becoming a better trader, in getting the price action volume guide and mastering charts, and also potentially becoming the Trader of the Week, then join the Gravity chat, and we'll see you there. All right, now let's take a look at the elements of the supply and demand runs. I have three goals with this video. First is to improve your price predicting ability in the short term. The second is to get your order filled at the best possible price. Because when we limit buy or limit sell, if we limit buy at the bottom of a short-term market pattern, our losses will be smaller and our gains are going to be, our profits are going to be larger. But if we actually just market buy whenever price goes up, our losses will be greater. Plus also fees are going to make your losses even greater than that. And your profits just won't be as big. So I think it's important for you to try to master trying to get your buy orders filled as low as you possibly can and trying to get your sell orders filled as high as you possibly can. And today we're going to go into the strategy of exactly how to do so. And also, if you like scalping or just short-term order book trading, then this video is definitely for you. So I took a few of these slides from last year and I added a few newer terms. So the first thing I want to talk about is what is a demand run, what is a supply run, and what is order equilibrium. You may notice that there's some times when on an order book, you see many bids coming at the top of the order book, and then you begin to see many market buys and the price just begins to rise with very little resistance. This is known as a demand run, where you see large moving bid orders. So this is when you see a lot of bids toward the top of the order book, and whenever price goes up, the bids follow it and keep pressing price higher on higher and higher demand. You see many market buys. When you see the order history, it's going to be green, 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 green as everyone's market buying and price is rising. And you're not going to see many offer orders. Now, with a demand run, you may think, wouldn't it be great to buy during the beginning of a demand run? It would be, but it's very hard, and you're probably not going to be able to do it. Here's why. During the beginning of a demand run, when you begin to see many limit buy orders popping up, you begin to see a lot of market buying occurring, and you are pretty confident the price is going to go up. If you place a limit buy order and try to get it filled, it will probably not get filled. There's so much competition on that Bitmex order book in the short term that you're just going to be, 1 millionth in queue at the top of the order book. However, if you make the mistake of keep trying to get your limit buy order filled because you don't want to use a market, and price goes up, and then you finally get your limit buy order filled, but price just tanked. And you're wondering, why did I ever buy this? Why did I ever try to buy at these higher prices? What happened? Here's what you did. You limit bought at the top, at the end of the demand run. So as demand was waning, you provided the very last bit of demand to a market seller who was happy to sell at a much higher rate. So during the end of a demand run, it's going to be pretty easy to get your buy order filled. So you may be wondering, this is all pessimism and negativity. So you're saying that during the beginning of these demand runs or these short-term uptrends in the order book, I just can't do anything? Not exactly. I'm going to be showing you guys what we can actually do to play these markets successfully. Let's talk about supply runs. Just the opposite of a demand run. You're going to see large moving offer orders. So price is going to be clamped down by large limit sell orders, and price is going to continue to move down and down and down as long as those limit sell orders keep pushing price lower. You're going to see a concentration of offers at the bottom of the order book. You're going to see many market sells, and you're going to see small and very few bid orders. Now, during the beginning of a supply run, it's going to be hard to fill your limit sell order because supply is so high. So many people want to limit sell, you're probably not going to be the one who gets to do it. But during the end of a supply run, if you just keep trying to get your limit sell order filled, it's going to get filled at a pretty bad price. I promise in like 2 minutes we'll talk about how to actually combat this and buy at the best price and sell at the best price. But first, let's talk about equilibrium. This is the third kind of order book pattern. You have demand runs where price rises in the short term. You have supply runs where price falls in the short term. But then you have price patterns where just nothing's happening. These are known as equilibrium. And this is when the bidding and the offering pressure is about equal. There's no dominance of many more bids than offers in the very short term. And when I say the very short term, and when we're looking at the order book here, I am only talking about the order book levels that are the very closest to price. So when you look at the order book, like if I pull up the Bitmex Ethereum order book here, I am only looking at these orders here. This video is not about order depth. This video is not about looking at the entire order book and doing a strategy on that. This video is on getting your order filled at a great price or scalping the order book. So we're only looking at these kinds of orders. Now, supply is just about equal to demand in these phases of equilibrium and in consolidation. But there are two different kinds of active and there are two different kinds of equilibrium, active equilibrium and inactive equilibrium, and you have to make the distinction between the two. Active equilibrium is when you have a lot of bidding pressure and a lot of offering pressure and price can't do anything. Price just can't really go anywhere. It's just, you're just gridlocked here. And we're going to talk about how you can actually build a strategy around fighting against that and being successful in that. You also have inactive equilibrium where there just aren't that many bids and just aren't that many offers. Typically, it's a much better situation when you have an inactive equilibrium, when just not many people are bidding and not many people are offering, are putting limit buy orders and putting limit sell orders. This is not great. This can be a lot better because if there just aren't that many limit orders, then it's going to be a bit easier for your limit order to get filled. Let's go take a look at, and I just want to show a visual of what does an active equilibrium look like and what does an inactive equilibrium look like on a price volume chart. All right, this is 1 minute candlesticks, and I'm only using 1 minute here just to show the supply and demand runs. This was for sure active equilibrium. Do you see how price was just not able to go any higher than 136.25? Price is just not able to go any lower than 136.2. Well, this is happening because there was probably a very large offer, very large limit sell at 136.25, a very large bid at 136.2. Price did nothing. It just stayed in this point of active equilibrium. But then notice after a prolonged period of just price not doing much, then we get this high volatility. Now let's talk about what is inactive equilibrium. There just aren't that many bids. There just aren't that many offers. Price isn't clamped, but price is just kind of flowing to and fro within a consolidation phase. That looks more like this. This is inactive equilibrium. This is where we don't really see dominant bids. We don't really see dominant offers, like very large bidding like this is reasonably strong bidding and price will probably rise in the short term. This is a demand run that's about to occur. But this would be an example. This price chart right here, from here to here, this is inactive equilibrium where it wouldn't be hard at all to get your limit orders filled. So that's a visual example of what those look like. All right, we looked at supply runs, we looked at demand runs, we looked at equilibrium, and I think you guys now know what each of those means. You can also just think of a demand run as a very, very short-term uptrend. It's a short-term uptrend until the uptrend stops and either turns into a supply run where you get up Demand run turns into a supply run and you get something like this. Or demand run turns into equilibrium and then either resumes the demand run or turns into equilibrium and then turns into a supply run. That's really what we're talking about. Now, the best price spot possible to limit buy in ever really is at the end of a supply run. You want to limit buy when the very last of the sellers sell. I mean, then you're buying the market bottom theoretically. And you want to sell when the very last of the market buyers are market buying. Then you can sell at the very top. So what you need to do here is spot and interpret a supply run, spot and interpret a demand run, and be able to place your limit orders accordingly. Here's an example. Let's do two different kinds of traders. One who knows how to interpret and trade properly with supply and demand runs, one who doesn't. Price is currently consolidating on FUSD. Inactive equilibrium, not much happening. Let's say there's a 10-cent spread. Well, price is just kind of going here to here to here, 10 cents. We have two traders. The first one is, they're both bullish. They both believe that the price is going to rise, and the first trader is just eagerly, waiting for price to do something. He sees this occur and he buys. He believes the price is just going to keep going higher. He's right. Price does go a little bit higher, then it falls. This is trader number one. Now, what does trader number two do? Here's what trader number two does. He's not going to use a market buy order and market buy at the top like this, trader did. What he's going to do is say, all right, I currently see a demand run. There are currently many limit buys that are pushing price higher. There are currently many market buys. Price is going to continue going higher. I am not going to limit buy. I am not going to market buy. Now we see a bit of a supply run here. This is my opportunity to buy. Now the other trader might be just saying, oh, geez, this looks terrible. This, everyone's selling. I was wrong. I definitely was wrong. And what ends up happening is this guy who market bought at the top, the limit buy order of the smarter traders here, that this trader market sells. And he market sells down to actually the exact price where the smarter trader placed a limit buy order. You can see here. And then to this guy's horror, to this guy's shock, price does this. Because what this guy just did is he bought at the top of a demand run during this consolidation phase, and he sold at the bottom, and he sold at the end of a supply run. So he just bought the top and sold the bottom. Whereas the smarter trader, who's a bit more calm, understands how order dynamics work and how to take advantage of other traders and how to take advantage of the market. He sees that I'm going to wait for this supply run to begin to sell. Everyone's market selling, so I place a bid. I get filled, they stop selling, and price goes up. This guy makes all the money, this guy loses all the money. So the best spot really, in this situation, the best spot to buy would not have been here, buying the breakout. I mean, it's a possibility you can buy the breakout, but in the short-term order book, you need to be the one who's buying at the end of a supply run. Now let's go into an example of, let's say we have two traders on Ethereum, both want to short, both are bearish, right? We see this. Same kind of pattern, but before, price had, let's say, price recently rose, now it's just consolidating like this. Those are, very ugly chart that I just drew, but, those two traders are bearish. Now, the first trader, he looks and he sees, that the market begins to go down like this. So he sells, and not surprisingly, he sells at the end of a supply run. Not a good idea. And then the smarter trader, who is taking his time to play a short here, he places a limit buy. Not a limit buy, a limit sell order. Let's say here, and price goes up a bit. Price goes up a bit here, and both of these traders are in a bit of a loss because the price does rise a bit higher, and then eventually price just continues to rise and hits. Let's say they put their stop loss at the same price. Okay, both of their stop losses are here, where the ENT is, and both their stop losses get hit. All right, both were incorrect. Price was actually bullish. You were wrong. Who lost more? This guy lost so much more money because guess what? He sold at lower price, at a lower price, plus the fee of a market order on Bitmex. This guy who limit sold here, he didn't really lose that much. He sold at a higher price, which is already a better thing. It's going to lead to less of a loss. Plus, he got the rebate, meaning that when you place a limit order on Bitmex, you get paid to do so. So you get a rebate, plus the rebate of a limit order. So to be honest, I think that this guy is going to end up losing on this kind of trade hypothetically, like 0.4% drawdown. That's all. This guy, like 1.1%. This guy might lose like 1%, or even more, just because this guy was more patient. Both were wrong, but this guy was more patient, and he lost way less. So this is important. Whether you're scalping, whether you're swing trading, whatever you're doing, you need to be able to trade during. You need to be able to buy during a supply run and sell during a demand run. How do we do that? First rule of supply and demand runs: do not talk about supply and. Okay, I had to put a Fight Club reference in there. The minute I started saying that, I was like, okay, don't do the Fight Club. Don't say it. And then I was like, okay, I had to say the Fight Club reference. Okay. Moving on from Fight Club. So the first rule of supply and demand run is that there will always be a demand run followed by a supply run. Whenever price goes up, it's always going to come down at some point. Don't fall into the trap of just thinking that price is just going to continue to rise. Yeah, sometimes there's going to be a case where there's a very strong demand run. Price goes up a bit, stalls for a bit, and you buy, and then price continues to go up without any supply run ever occurring. That's just a very strong demand run, where there's a lot of demand and a lot of market buying and limit buying too, and prices continue to go higher. But typically, you're going to see a demand run followed by a supply run quicker than you would think. Also, a supply run will always be followed by a demand run or equilibrium. So when price goes down, don't be the one trying to limit, keep trying to get your limit order filled. Price goes down more, you try to get that limit order filled. Price goes down a little bit more, you try to get that limit order filled, and it fills, but then price goes up. Or even worse than that, price goes down, and then you just like market sell everything, 100x, and then you're dead. Instead, what you do, you wait for the retracement, the supply run completed. Now you have a demand run. You wait for the demand run occurs, you place your limit sell order. Yeah, you go to a bit of drawdown, price goes a bit against you, that's fine. But then that happens, and you still at a great price. So that's what you want to do. Now there are three patterns that can occur that can tell you when a supply or demand run is, likely to occur. One is the pattern of the volume spike on the 1 minute candlestick followed by aggressive limit order placement in the opposing direction. Let me show that. Notice here, volume's not really spiking, nothing's happening. Volume really spikes here. The 1 minute. Geez. What do we see? Well, actually, during this point in time, I saw many limit sell orders popping up. Many limit sell orders around the 138.6 to the 138.8, and they just clamped on price. Once they all popped up, market selling. Also, the limit sell order actually continued to move down with price. So it was hard for price to move any higher. How do we play this market? Well, we see a volume spike on the 1 minute candlestick. We also saw aggression, a very, very aggressive limit order placement. So what we do is we wait for price to just slowly go up, and that is where we place our limit sell order, somewhere around here. Because as price is just weekly going up, you get filled, you get a bit of drawdown, price goes a bit against you, but then price, price just tanks. So that's really what you want to look for that strategy. Second is the stop loss hunt. Price goes just beyond a high or just below a low, hits many stop losses. Why am I so emphatic about stop loss hunts in supply demand runs? Well, imagine price is going down in a supply run. Price goes down a little bit further and then goes below a low. That's going to trigger a large amount of selling, which is just tons of liquidity for us to limit buy at. When the price just drops quickly on that stop loss hunt, that is going to be probably the end of the supply run. You're going to see a lot of selling. and we can buy during that heavy period of selling and then make a profit as price rebounds after screwing over all the traders who just got stop loss hunted. Third pattern, which is my favorite, is the consolidation pattern of both the active equilibrium, which is kind of difficult to deal with, and also the inactive equilibrium, which is much easier for us to deal with. And what you want to do here is if you see price goes in a demand run, price is moving upward. Let's show it here. Price is moving. What's a good pattern here? Looking for one. Yeah, this one's fine. So price is moving upward. Price is moving upward, and then you begin to see some consolidation here, inactive consolidation, where there aren't that many strong bids or offers yet. What you want to do is within that phase of consolidation, you want to look for a mini demand run to limit sell at. So mini demand run, you can limit sell here. Mini demand run, you can limit sell here. You could even limit sell around here for the mini demand run. And let's say that you were incorrect. Let's say you're like, dude, this looks super bullish. Now price is consolidating and I can buy within consolidation. Okay. Well, you could have put a limit buy order around here. And yeah, you're going to lose money because price went down. But you're going to lose a lot less money if you limit buy here than if you market buy at the very top, because you're just buying at the top of a demand run. So this is the power behind these demand and supply runs. Even if you're wrong, you're going to be minimizing your losses by buying during the end of a supply run and selling during the end of the demand run. And it's these consolidation patterns and the mini demand run and the mini supply runs that occur within consolidation that can give you great opportunities for you to fill your orders. So let's go take a look at Ethereum USD. And how would we interpret this? Well, the first thing that I want to do before I make any analysis or any decisions here is let's interpret what was going on here, okay? There are 4 stages that we can call out. Demand run, supply run, active equilibrium, inactive equilibrium. We see active equilibrium here, not much happening really, not much volume either. And then we see a very, very strong demand run. Demand run continues, demand run continues. Now, then we see a bit more of inactive equilibrium where price has a little bit more ease of movement and is kind of just short-term, just moving like this. And it looks like price is having a harder time moving higher, and then price goes down, and this is clearly a supply run. And then this supply run ends, and it turns again into an inactive equilibrium. And currently, this doesn't look like it's going to turn into an active equilibrium where we just get a large limit buy and a large limit sell, and price isn't really able to do anything. How do we play this market? Here's what we do. First, you need to determine if you're bullish or bearish, and that is not what you decide in demand and supply runs. I'm going to repeat that. You do not look for supply and demand runs to be bullish or bearish. No, that is other analysis. The only purpose of this is to find the best possible price for you to fill an entry or an exit order in the direction of your bias. So if you're bullish, to fill your buy, and if you're bearish, to fill your sell. Within this consolidation period, let's say that we are bullish. What do we do? Well, limit buying here is probably not a great idea. What I'm actually going to want to do, I'm not going to just put a limit buy order here and just hope it gets filled. No. What I'm going to do is I'm going to wait for a supply run down to here, wait for a supply run, try to get my limit buy order filled, and then price should go higher if my bullish prediction was correct. Now let's say I'm bearish. No reason for me to put a limit sell order here and just hope it gets filled. What I want to wait for is a weak to moderately strong demand run for price to just begin to go up, go up, go up, go up, and then I want to fill my limit sell during that demand run. Now, during this current phase of consolidation, some patterns where you actually could have done that, we are bullish and price is currently here. We don't know what's going to happen in the future. Do we buy at the market top here? Price is going higher. Price is going higher at 137.25. No, you stay patient. You wait for the supply run. You place your limit buy order during that supply run. You see this occur. Do you do anything? No. You just missed the supply run and now the demand run's beginning. Oh, I market buy here, of course. No, you do not market buy there. You wait for another supply run. Now you're ready. So now there's another supply run here. This time you say, all right, I'm going to get my limit buy order filled at 136.95. So price begins the supply run. Supply run continues, the selling continues. You just got filled at 136.95. 1 minute later, price continues to sell. Price is at 136.85. That's not a big deal. That's fine. That's a bit of drawdown that's going to occur because what you did was you limit bought near the end of the supply run, but not the very end of the supply run, because that's kind of hard to do sometimes. It is possible though. So you limit bought here, and guess what? Price went higher. And you, my friend, are currently in a profit here. And if you had tried to then limit sell during a demand run, then you could have actually had a very short-term scalping profit. Now again, let's just do the comparison of the two different kinds of traders. One, limit buys at 136.95 after seeing a weak supply run down to here. Two, market buys at 137.25 up at the market top because he thinks the price can only go higher. Both were bullish, both were correct, price did go higher, but one got filled at a much better price here than this guy. So I'm not going to go too much deeper into this. I'm going to probably do another video on exactly how we can go a little bit deeper into looking at these supply and demand runs and taking advantage of them. But here's what you can do to master them. One, if you would like, you can get the Gravity Guide, which is link in the description below. You can get that, and you can come to the professional trading chat that I now have, and we can chat and we can look at we can look at demand and supply runs, and we can look to make you a better trader. Two, practice this. Look at order books. Make predictions. Place mock orders, meaning I can't actually trade on Bitmex. I'm just looking at the exchange, of course, here. But let's say I pretend like I'm buying at 136.9, and I say, all right, I'm gonna limit buy at 136.9, and let's see what would have happened, if price goes down to here. You can do that. You can also just make predictions. Like right now, it looks like we have some market selling, and it looks like we have a little bit more offer pressure, selling pressure, than bidding pressure, buying pressure. So it looks like this might be the beginning of a supply run. Supply run meaning price goes down in the short term. So we'll see if, then you see if you're correct. You see, okay, either A, does the supply run begin and price falls below 137, or do the bulls regain steam, and actually the bids begin to get a bit higher, and then we get to see some market buying, and then a demand run begins. Or are we just going to see prolonged consolidation here with an active equilibrium with large bid and offer walls? That's it for this video. Practice up. And when you trade with this new kind of trading method, with trying to get your orders filled at great prices, do not trade with your full account, please. Try these new kinds of methods, especially if you haven't heard of this before, with very low capital and very low equity, because you need to practice this first. Don't just, you don't want to just play in a professional NFL game without ever even picking up a football. You're gonna get wrecked. So try to practice with this, practice the order book, and see what you can do. With that, happy trading. See you guys next time.